high. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the latest developments in the banking space. It is the 15th of February and I am Ruchika Chitravanshi. In today's episode, our cover story explores whether the buck stops at the company board in the ongoing Paytm crisis. Our Banker's View this week features SBI Chairman Dinesh Khara. In Banking for You this week, we will tell you all about the changing world of money changers. For Expert Take, our consulting editor Tamal Bandhopadhyay brings us up to speed on the Paytm crisis. At the end of the show, we will tell you the results of last week's poll and the question for this week. Paytm Payments Bank has been in the news for all the wrong reasons. While RBI has pulled up the company for various compliance issues, the spotlight has also turned towards the company's board. In our cover story today, Raghu Mohan raises some pertinent questions about the role of Paytm's board in the current crisis. Did the Paytm board slip up? To find out more, watch our cover story.
On 31st January 2024, the RBI took regulatory action against Paytm Payments Bank Limited (PPBL). Under Section 35A of the Banking Regulation Act of 1949, the central bank exercised its powers and directed PPBL to stop onboarding new customers immediately. The banking regulator held that the Comprehensive System Audit Report and subsequent compliance validation report of the external auditors revealed persistent non-compliance and continued material supervisory concerns in the bank, warranting further supervisory action. These developments spotlight the role of the PPBL board and particularly its independent directors. Why did the PPBL board not act quickly enough on RBI's concerns? Was the executive management of PPBL and the independent directors on the same page? It has been gathered that while independent directors were concerned with anti-money laundering and operational issues, the real emphasis from RBI was on intra-group transactions and control by Paytm parent 197 Communication Limited or OCL of the bank. All RBI correspondence was brought in full detail before the board and independent directors had many questions. It now transpires that the scale of operations and the nature of the payment business were mind-boggling compared to a conventional bank. The four independent directors at the payment bank were Manju Agarwal, Shinjini Kumar, Ramesh Abhishek and Pankaj Vaish. Agarwal, a former deputy managing director of the State Bank of India, resigned from the board of Paytm Payments Bank on Thursday, 8th of February.
I think what the action is sent a message is that independent directors are not only guardians, but in effect, they have to be gatekeepers too. So the independent directors have to ensure that whatever directions, policies, and regulatory guidance which has come in has to be implemented. They have to be satisfied themselves that the regulatory guidelines have been implemented. So to that extent, I feel the pressure on independent directors would definitely go up.
The developments at PPBL come 9 months after the central bank held a meeting with the board of directors of state-run and private banks on May 22 and 29, 2023. The first of its kind day-long interaction with Governor Shaktikant Das, deputy governors and the executive directors of the Department of Supervision, Department of Regulation and Enforcement Department was primarily on issues related to governance, ethics, the role of the boards and supervisory expectations. The governor made it a point to mention that individual directors should not have any conflict of interest that may hamper their objectivity and independence. It is the board's responsibility to ensure that policies are in place to identify potential conflicts of interest and deal with them. The governor said, "In this respect, it is necessary that independent directors are truly independent. That is, independent not only of the management but also of controlling shareholders while discharging their duties. They have to always remember that their loyalty is to the bank and no one else. And I am not advocating any confrontation but only stressing the need for the required level of alertness among all directors.
If the executive management does not act on the concerns of the independent directors, then of course it's a main failure is on the part of the executive management. But the question arises as to, okay, what next? If the executive management has not acted on my advice, what is the recourse to me? I think there are enough channels available to the board to escalate the matter to the right forum. I think the board would be failing in its duty if it doesn't do that.
The meeting was a significant first step following Finance Minister Nirmala Sitharaman's announcement in the Union Budget for FY24 on the need to improve governance and investor protection in the banking sector. The last word on PPBL and its board hasn't been said yet.
The board of Paytm would have a lot to answer for, and as Raghu rightly pointed out, the last word on the board has not been said yet. Moving on to our next segment, we bring you an exclusive chat between Business Standard's Tamal Bandhopadhyay and the chairman of State Bank of India, Dinesh Khara. Khara spoke about the home loan market, SBI's risk management practices, and some recent budget announcements. Here's the chat.
Now I understand SBI is as nimble-footed as some of the private sector peers. Your processing time has dramatically improved. Can you take us through?
For all purposes, from the year 2011 onwards, we have actually significantly improved our processes in terms of the centralization of the processing. Initially, we used to have about 150 odd centers from where we used to process the housing loan for almost about 20,000 plus branches. So today we have come to a situation where we have now got almost 400 centers spread across the country, and from where we are doing the housing loan sanctions. And also it's a centralization in terms of the sanctioning, disbursement, documentation, disbursement. So everything is now centralized across the country.
The subject is housing for all, and how do we add to the resilience of the Indian mortgage market. It's globally, it's a very loan to GDP ratio, loan to mortgage ratio in India is the lowest, 11%, right? This is the market and this is the segment which can really play in a very, very, very positive role to our ambition of growing economy to 5 trillion, becoming third largest economy. So what other things need to be done?
I think the formalization of economy is something which has really helped this sector to grow. The kind of challenges which normally a financier face is essentially relating to the digitization of the title records. Many of the states have done it, but some have yet to do it. So that is something which is the first and the foremost. Then, of course, there is always an effort on the part of any lender to look at the EMI, NMI ratios so that the borrower should not be over leveraged. What we have seen is that in the formal sector, there is perhaps not much of challenges, but in the informal sector, there are challenges, and that is one of the reasons why perhaps the housing finance companies are in a position to take a call in terms of the imperfect documents or inadequacy of the title deed, or maybe availability of the very clear record in terms of the land and title deed. So I think that is one of the major challenge which we face. And of course, I would say the RERA has, of course, brought in a lot of discipline in this particular sector. So when it comes to housing for all and the government initiative in terms of PMAY went a long way in terms of making it a reality for many. So I think this is something which works very well.
Budget already happened. That's an interim budget. We'll see the full-fledged budget post the elections, etc. But is there any scope for fiscal incentives, tax incentive, etc., to pump up the sector?
I think much of it will depend upon how the The GOI will look at it at the time of the final budget. But yes, of course, I certainly feel that there could be a scope for giving some incentive so that homeowners are also encouraged. Because the other piece is that though HRA or the rent is deductible in terms of the tax, but as far as the home loan installments are interest on the home loan is concerned, that has probably it can be revisited. Though of course it is allowable as an incentive, but yes, of course, over the period of time when it was last looked into, maybe there could be a scope for revisiting this aspect.
Can you give us some sense, like 7 trillion plus that your home loan portfolio, is it predominantly retail, or is there any segment which is also LAP there, or the developers?
We hardly have any LAP for individual and LAP for corporate all put together would not be more than 2-3% in all. So it is all pure play mortgage loans or maybe housing loans and for the retail sector.
But overall, being the country's largest bank, people say that now the elephant is dancing. Is it to the tune of AI and analytics?
Of course, we have started leveraging the database which we have. It was quite a static database for many, many years. But now we have created various algorithms, and we are running those algorithms on our database, which actually helps us in honing our risk management practices. Apart from that, it also helps us in terms of identifying the potential customers whom we should reach out for offering our various products and services. And on the top of it, it also helps us in offering the customer what they are looking for. So that is something which we have started doing.
Because you can give home loan at a much lower rate, but your target audience is different, the salaried class, etc., etc. And NBFCs need to have those target. I mean, those are, I would say, on the risk parameter will be slightly risky, and they would charge the higher rates because they don't have the advantage of CASA, what the savings bank and the current accounts which the banking system has. So is this the architecture for Indian mortgage market? Will it continue, or do you think some kind of disruption, it can be approached in a different way?
No, I think as I mentioned that if at all there is the increasing credibility of the land records and also the certainty of the income streams will certainly boost the confidence. And invariably nowadays we are also evaluating the credit scores of the borrowers, because that is something which captures the unstructured piece very well. So we are evaluating, not that we are only confining to the salaried class. We are looking at some threshold level when it comes to the credit scores. And if at all the borrower has got those credit scores, we are extending them the interest rate benefit also. And also we are very happy lending to such customers.
Post Lehman crisis, I think SBI got into this teaser loan where the first 2 years it will be a very low rate and then the go up and all. So you keep on experimenting, innovating. Is there any kind of innovation we can expect from SBI in the mortgage market?
No, those are the early days when we started getting into the mortgage market. That was the point of time when it was felt that in 10 years' time, all these borrowers will have a higher income and their ability to repay will be much higher. So as against that, what we have observed is that nowadays, on and average, the average duration of such loan book is just about 8 years or so. So I think we are encouraging people to go for the second home loan. We are encouraging people to go for the upgradation of their homes. So we are extending credit facilities for all such kind of things also. So these are the add-ons which we keep on offering.
NIM is coming under pressure, CASA is going down, credit to deposit ratio is going up. For many of the banks, it's 100% plus. Reserve Bank of India has been talking about it and all. So what's happening?
I think this is the new paradigm which we are moving into. As we are moving into the developed market, the financial markets becomes more and more efficient. And that is what it will probably operate at very thin liquidity levels also.
Well, the housing finance sector has grown in India with the formalization of the economy. And Khara rightly pointed out how we need to create solutions that are typical of the Indian economy when it comes to housing for all. RBI is set to overhaul the money changing in the country and has floated a discussion paper for the same. But first things first, what are money changers and how is their role evolving with RBI's new framework? Let us find out.
A money changer is a person or entity who exchanges the currency of one country for that of another. They're a key cog in the international travel market and facilitate the exchange of nearly $2.5 billion in physical foreign exchange annually. According to guesstimates, the sector employs nearly 11 million countrywide. The Reserve Bank of India floated a draft licensing framework for authorized persons under the Foreign Exchange Management Act 1999 in December 2023. This architecture had last been subject to a review almost 2 decades ago in March 2006, and the changes are expected to chisel a new ecosystem. The review aims to rationalize the authorization framework for money changers because of the widespread availability of banking services to the public and look at alternate models to facilitate foreign exchange related services. It also aims to improve the scope of services offered by Authorized Dealer 2 and revisit the existing regulatory framework. Among the proposed measures is a new category of money changers who can operate under the agency model by becoming forex correspondents. These entities, technically classified as Authorized Dealer 2 or AD2, will also be granted permission to facilitate trade-related transactions up to 15 lakh rupees per transaction. The upcoming disruption in the money-changing industry will result in approximately 1,800 firms exiting the business. This is akin to the developments played out in the old world forex brokerage businesses. These firms acted, as the term suggests, as brokers in the forex market. Out here, the number of firms has dwindled from 125 in 1998 to 40 odd just a few years ago to about 15 now. 5 firms corner 75% of the volumes: Kanji Pitambar and Company, F.R. Ratnakar and Co., Vrijlal Thakur and Co., Govindram and Sons, and Meklai and Meklai. The stage appears to be set for integrated players. Those offering tourism-related services, forex and cards will survive. Like Thomas Cook or Ebix, which purchased the Centrum Group's forex business, Centrum Direct, for 1,300 crore rupees in 2018. Centrum Direct was into overseas remittances, prepaid travel cards, and travelers' checks. It has a 40% market share in outward remittances through partnerships with tuition fee payment aggregators. The bottom line, sometimes the line, your money changer for all practical purposes, will mimic a bank on the foreign exchange front.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Continuing with the theme of our cover story today, we continue our discussion on payment service provider Paytm. I spoke with our consulting editor, Tamal Bandyopadhyay, on what is next for Paytm and the implications of its current crisis on consumers. Here's the chat. Hi Tamal, welcome to the Business Standard Banking Show. Paytm is making all the news, and your column as well has talked about the Paytm Payment Services Bank and the crisis. Why don't you bring us up to speed as to what exactly has gone wrong at Paytm and why?
Well, I don't think I'm capable of adding too much to it. What Reserve Bank of India said is the persistent violation of RBI norms. So it's pretty scant respect for the RBI norm. That's what they said. Multiple issues about the group companies, because Paytm, the entire group, if you look at this, there is OCL, which is the listed entity. And then there are innumerable group companies, associate companies, and subsidiaries, and of course the overwhelming presence of the Paytm brand. So there were issues about right from probably the exchange of data, which is the banks should not share with anybody else, to other part related party transactions, etc. But most importantly, it's the KYC violation. That's what happened is this, there are two kinds of KYC for an account have, for any account has. One is the soft touch KYC kind of thing, and one is very hardcore KYC. Now, when you have not followed the KYC norm in a perfect way, then yes, the transaction can happen, but there's a limit to the transaction. Okay. In this case, what happened is this, even those, and which is lakhs and lakhs of KYC, where it's all the rules are not followed, but the amount of transactions runs into 100 and 1,000 times more than it is permitted. And there the needle of suspicion is this, there could be money laundering issue as well, which is why even beyond Reserve Bank of India, now we are talking about, or the market is talking about, the role of the investigative agencies.
Now, one other thing is that is on minds of a lot of people, that what next for Paytm in all this crisis? How do you see us progressing from here?
No, there are two parts of it. What's in store for the Paytm Payments Bank, and what's in store for the consumers. Now, as far as Paytm Payments Bank is concerned, I am afraid to say that, and it's not a listed entity, right? It's an unlisted entity. I am afraid to say that I don't think it has any future. Because if you look at the RBI action, and under particularly what segment, 35A section of Banking Regulation Act. So typically, Reserve Bank of India exercise this option when there is no other option available for the regulator. This is the last option. And the time given to Paytm, like up to 29 February for all the activities, and ultimately by 15 March, everything needs to be closed. So it's as good as a moratorium, and then I would like to believe the next logical step will be supersession of the board, and probably, again, I can't vouch for it, the entity will go for liquidation. Now, does that mean that consumers will have a problem? That's a separate story altogether, because as you know, Paytm does not have too much of money. It's 3,285 crore depositors' money as on 31st March 2023. That's the last available number. It could be a little more, maybe 4,000 odd crore, etc. So this money is already covered by DICGC, like any bank happens. Up to 5 lakh, your money is recovered, your money is covered. And here is far more, people are keeping money, much less money. So the people, people, merchants, or everybody else, whoever has kept money with Paytm, their money is absolutely safe. As far as the consumer concerned, this is that what are the consumer? One kind of consumers are the depositors. Depositors' money is absolutely safe, and nobody keeps money because they are not allowed to keep money, or much money in the at a payments bank. And then there are the merchants, where all these POS machines are there. So those guys, and who use the Paytm UPI, and the Paytm app, all kind of things. So though they will be, which you have seen that many banks have expressed their wish to take over all those Paytm customers, provided they quote unquote, they said, if we have the RBI blessings. So it's up to Reserve Bank of India how it wants to do that.
So Tamal, in fact, that was going to be my next question, that what do you think is ahead for the customers? Any word of advice that you'd like to give to the customers? Also, because we are still awaiting RBI FAQs to come in this matter.
Look, Paytm is a great story as far as payment service is concerned in India. In fact, much before anybody else. I have seen in Kashmir's on Dal Lake, a boat where it was used Paytm QR code, and we did pay. I remember, I think 2018 probably, much before the COVID, we did pay through the Paytm app. So it's a great story. But is it a disruptive thing? I mean, is it a systemic crisis? Can it happen? Or financial sector instability? Can it happen because of if the Paytm bank goes for liquidation. I think Paytm, the brand is the overpowering presence. As far as the payment bank is concerned, if you see its numbers, it's not something which is a juggernaut and which will create a lot of problems for the financial system. Nothing going to happen. And Reserve Bank of India, I am absolutely sure we make the FAQ as you waiting, and when you probably telecast it, put it on the YouTube. It's already been out. So we will see a smooth transition. So what again is going to happen? The POS machine that the merchant acquisitions, what they have done, and that's the value Paytm brings to the table. This merchant acquisition, which are the thing which is 7 lakh point of sales customers. Okay, then what happened is the 8 million FASTags. So this has to be changed. I mean, somebody else needs to, another entity will take over this from the Paytm bank. That's the story. So customers will have nothing to do. But Paytm is synonymous. Like Xerox is for photocopier. Paytm is for payment system here. And you remember the Paytm app, Paytm Karo. So it's transferring money between you and me is Paytm Karo. That's the thing. So
Definitely
that's the
strong brand, and yes, it has a very overpowering presence, and that's why, of course, this is a developing story, and the days to come will reveal the future of Paytm to us, and also for the customers as well. You've given us a good word that need not worry. So on that note, thank you so much, Tamal, for joining us today and sharing us your thoughts. It is time now for our poll results. Here's what we asked you last week. Will you continue to bank on Paytm? 40% of our respondents said yes, they would, and 60% said no, they would not continue to bank on Paytm. This week, we want to find out how your bank is treating you as a customer when it comes to their charges. So here's what we are asking you this week. Is your bank transparent on charges? You can tell us yes or no on Twitter, Instagram, LinkedIn, and our website. The poll is open from today, which is Thursday. That is all we have for you today. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.